Welcome to the new European ETF Market Trends. We're here with Marlène Assine, Head of ETF Research at Lyxor Asset Management, to review the new market trends for 2015. How were the flows in 2015, Marlène?
Flows were very sustained across all regions worldwide. ETF gathered more than $347 billion across all regions. In the US, ETF flows reached $228 billion, which is high, but not above the level of 2014. Whereas in Europe, flows reached record high at $72 billion, which is 62% above the level of 2014. So as a whole, the European market asset under management now reach 452 billion euro, which is a 25% growth versus the end of 2014, including a 9% market impact.
So, which kind of ETF did investors favor?
Investors favored European equity ETF in a market dominated by big divergences in both monetary policies and growth all over the world.
How would you qualify the flows of equity ETF?
Equity ETF flows reached a 3-year record high of 46 billion euro in 2015, which represents 2/3 of total market flows. Flows were mainly concentrated on developed equity ETF with 48 billion euro, whereas emerging markets saw outflows of 2 billion euro.
To dig more into geographical details, what is the spread between regions?
First of all, Europe. Europe gathered 38 billion euro of flows, which is 53% of all the flows in 2015, driven by the quantitative easing implementation of the European Central Bank and the improvement in the economic sentiment. For Japan, the positive trend continues, but at a moderate pace. 3.7 billion of inflows, which is 70% above the level of 2014, but below the record of 2013. In the US, flows were positive, but limited, at 2.7 billion, which is 83% below the level of 2014, as equity market has reached high valuation. Emerging market outflows were driven by fear on China's slowdown and of an interest rate increase by the Fed that finally took place at the end of the year. Outflows mainly concerned Chinese ETF at 2.1 billion euro.
Were fixed income ETF flows sustained all over the year?
Yes, fixed income flows reached record high at 26.5 billion euro, despite a slight inflation in Q2.
And did flows affect all the fixed income market segments?
Yes, all fixed income market segments saw record high. European govies at 6 billion euro, investment grade bond at 5 billion euro, helped by the implementation of the quantitative easing. High yield market also at 2.1 billion, in line with the search for yield in a very low interest rate environment. Also, inflation-linked bond ETF reached record high at 1.8 billion of inflows, helped by the expectation of an increase in inflation.
Finally, is there something to remember on commodity ETF flows?
After 2 years of strong outflows, flows were slightly positive in 2015. But these high strong discrepancies between broad commodity indexation that gather 956 million euros, whereas precious metals saw outflows of 812 million.
Okay, thank you, Marlène. Thanks for watching us, and we will be pleased to meet you again next month for the January flows.